You can be tempted to make poor financial decisions, such as going all in for a better bartering system based on commodities like gold and silver, when it feels like the world is out of control and the news cycle is filled with a never-ending stream of terrible news. But let's get the facts right before investing your money into precious metals. Hello 101 community, welcome back to our YouTube channel. This video will help you make healthy choices and help you with how to make money using your commodities, but keep Dave Ramsey's words in mind. But before we begin, if you are new here, make sure to subscribe to our channel and turn on notifications to never miss any updates. Now, let's get to the video. Number 1, should you invest in precious metals? Unless you intend to start creating jewelry, investing your hard-earned cash in precious metals like silver, gold, and platinum might not always be the ideal choice for you. Anytime you examine an investment, you should look at how it has historically performed. You can see the direction in which it will go from what it has already done. Additionally, gold values are entirely based on human emotion. People rush to invest in gold when they fear the economy will crash because they think they'll be financially secure, but that's a misconception, as people usually return to bartering when the economy is in trouble. And as Dave also points out, since the Roman Empire, gold has never been utilized as a means of trade in a failed economy. Rarely will you be able to trade a bag of gold chains for a gas tank at the gas station. The fact that the dollar is a widely recognized medium of exchange is the only reason it has any value. It is a trust-based transaction, similar to a bushel of wheat, a barrel of oil, or more recently, hand sanitizer and toilet paper. These precious metals are simply a commodity. On another hand, Robert Kiyosaki says that metal assets like gold are insurance rather than an investment. But why would you invest in something you cannot use to barter? The writer of Rich Dad, Poor Dad, Kiyosaki, argues that while holding on to gold and silver adds no value, there's no return on this. The fact that in a pinch, I can use gold and silver as currency in almost any place in the world is the primary motivation for my investment in these commodities, says Kiyosaki. Further, the value of the dollar is purely speculative, and investing in gold may be a solid investment strategy in uncertain times. People often make poor financial decisions due to irrational emotions like fear and greed. Commodities always fluctuate up and down. It has a low rate of return, and the only factors influencing the price are people's fears or desires, says Dave Ramsey. But it's important to remember that currencies and money are distinct from each other. They both serve different functions and are often confused, but there's a big difference between gold and silver. For example, which most people usually seem to know about, physical precious metals are the only real money. Cash is a man-made fiat currency. Number 2, putting gold and silver to use. The primary distinction between investing in precious metals and other commodities is their practicality. To determine the worth of most other commodities, traders look at the market supply and demand. For instance, if you want to invest in coffee beans, you can gauge market value by looking at how many cups of coffee are consumed per person per day, how rapidly coffee tastes are shifting, and so on. People use precious metals for a variety of purposes. Gold and silver can be expensive, so the value may not be what you're looking for in everyday life or industry. Silver, however, has far more practical applications in industry and commerce than gold does. In the business world, silver is used in everything from dental work to electronics, so much so that it accounts for around half of all silver traded on the market. This is still negligible compared to other metals' practicality, exclusive industrial use. In contrast, the jewelry industry is the only real gold market. Investors can make educated guesses about the future direction of silver prices by considering factors like industry demand and the state of the global economy. However, Dave Ramsey thinks investing in precious metals is a bad idea. A recent article of his makes this claim. Ramsey argues that gold and silver are ineffective hedges against inflation and are no help in a financial crisis. One observer noted that during a recession, the only use for gold and silver would be to dream that someone would take your silver coins or jewelry in trade for a box of toilet paper or a can of gasoline. The value of precious metals as investments goes beyond their function as mediums of exchange. The gold and silver market is deep and liquid worldwide. You can always trade in your gold bullion if you need quick cash. However, it doesn't give you an idea of how to get rich or the freedom to invest in other things. Let's take a short break. We would like to ask you a small favor. If you liked the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. You can also support the channel by visiting our merch shop and buy one of our products. The link is also in the description. Let's continue with the video. Coins made of gold and silver are valuable in their own right and may also be used as currency to purchase other items. Investors in bullion don't have to worry about the banking and brokerage systems collapsing and having access to their money. The value of gold has been more stable over time than any fiat currency. It has a poor history as an investment, Ramsey says. As if to back up his claims with evidence from the past, Ramsey then talks about Nixon's decision to stop the government from exchanging gold for dollars. In 2021, we will have commemorated half a century when the gold window was shut. He argues that gold won't protect you from inflation because you can't exchange dollars for it at the government. Ramsey argues that precious metals like gold and silver are ineffective hedges against inflation and offer little safety in a financial crisis. Gold and silver values are so volatile and have been over time that you could only hope to trade silver coins or a watch for necessities like toilet paper or gasoline during a recession. The value of precious metals is not dependent on their immediate exchange value. The market for precious metals like gold and silver is substantial and dynamic worldwide. You can get cash anytime you need if you have bullion. In addition to Ramsey's argument, I also think gold isn't a good investment. Let me say it. In contrast, gold is not a sound financial asset. Many people fall for the numerous schemes that convince them to buy it. Quite said, I don't think gold is a good investment. In contrast to a bond, metal does not accrue interest. The dividend is not paid. Healthcare costs are high, and this plan may not keep you out of the woods. Its future value growth is also not guaranteed. Most investments are like that, I know. While dividend payments from a diversified portfolio of large equities are by no means assured, they do improve the odds. This is different if you invest in gold in the form of bullion or coins. I understand that investors are frightened of paper money as well. U.S. Treasury securities are backed by the full faith and credit of the U.S. government, but no investor has ever lost money on a purchase of these bonds. In such a scenario, the global financial system as we know it would collapse, rendering gold mostly useless. The majority of gold's worth stems from nervous investors. When investors are concerned about the stability of the currency market or the economy, they may decide to purchase this asset. Unfortunately, gold has been a bad investment since the 2008 catastrophe, when both Europe and the United States suffered severe losses, which they are still trying to recoup. No amount of gold or other metals will aid you in a low-inflation economy. As a result of low inflation and loan demand, interest rates have remained stable. This is a great time to be a majority among us who are worried about the cost of living. However, gold bugs spread fear. Despite the current economic climate, they insist you make money with them. Indeed, there's always a counter-argument, but the more likely scenario is the reverse. It will be some time before the United States and Europe are normal. Limited access to credit is met with reasonable interest rates. Profits at corporations continue to rise. So what will you do in times of crisis? Would you invest in gold? However, the recent gold price makes it difficult for an average person to invest. So, 101 community, we hope you can use this information for your personal benefit. Stay educated. If you want to see more videos like this, subscribe to our channel and click on the bell icon so you will be notified of every update. Also, check out the links in the video description. Remember, we live in turbulent times. The global economy is upside down, and we have made it our personal goal to deliver financial education to everyone who needs it. Watch our video appearing on the screen about how you can personally benefit in a recession. See you there!